Welcome to Friday, March 13th. Whoa, 2020, that's not a good thing. We're about 9:25 in the morning. That's AM, daylight savings time. You know, I've been around this a long time. I went through Black Friday owning both a stock firm and a commodity firm. Can you imagine the risk that was on at that point in time? It was insane. We didn't have the computers the way that they are today. I've been through the 2008 crushes with you, the 90s scenarios. And what we're in right now is different. And what's different, and you have to understand, those were financial scenarios. Now we have a virus scenario that in turn causes the financial panic. I get that. But we don't have a handle on the virus yet, and that is the most important thing. You're still reading about Roche and other companies that are getting their equipment up where they can test 10 times as many cases as they did just a week ago. This is phenomenal. It's not bad. It's good news. But you go into a weekend, you don't know what to expect, the news comes out, and the pattern had been China, we'd wait on the news, we'd hear more cases, lockdowns in more areas, the markets would tumble after the news, then try to recover midweek. Now it's about Europe and the US in these positions. China's getting much, much better. But now we're hearing the opposite side as to what's going on in France, what's going on in Italy. The UK is trying to time when they're going to lock down everything. They're working on that right now. There's stories in, I believe it's Reuters that I read on that. But in the U.S., we are already doing it. They're closing everything. Sporting events gone. Now, schools, you're waking up every morning, you're hearing more schools closed. Last night, I get home late, and my wife's out of town, so I went to the grocery store to make sure I had enough food. Whoa, panic. I live about 3 blocks away, so I drove my little car and went over there. You're fighting for spots. Then you go inside, toilet paper, there's a run on. Hand towels, there's a run on. As for the meats that are normally there, it was barren. The butchers still had it, and I'm talking these are big grocery stores, and the lines of people getting out. The great news is everybody's in a good mood. The bad news, I've never seen lines this big, including Easter and all the other holidays, Christmas. This blew anything I've ever seen away. Let's multiply that around what's going on. We then look at these markets, and if you think you can control this volatility, God bless you. These are markets not made for the everyday trader. And what you're dealing with, and put this in, I just want to leave it like this, is we were dealing with China on weekends from the January probably through the end of February period where we were hearing, more cases, they're locking down Wuhan, they're looking at Beijing shutting down all their retail. I can go on and on. That scenario's at the other side. The retail stores are open. The factories are reopening. The whole country's getting itself back to normal quickly. What's not is Italy's totally shut down. France is on the verge of this. The UK's getting its plans ready. And at our home in the US, what sporting event is still on? Tell me the place. Tell me people gathering, anything from 200 people on, getting into problems in all the major cities. So you're going to see more negative than positive. So you're going to go into Friday's home, then you're going to get the weekend news. The markets will react on Sunday to it. Markets will carve out a bottom, but this thing has to run its course. And it can't run its course till we know just what we're dealing with and the impact on everything from it. What's scary is already in many areas, children in schools, and that's a difference from just 2 days ago, and I'm talking the younger children are being told to stay home. They've tried in Chicago to keep as many schools open as possible because it puts a burden on the families. Now, a 2-working family, somebody's got to stay home and watch them. That's not a good thing. So you'll hear more about it. Steve Mnuchin meeting with Ms. Pelosi today. They're trying to work things out. But we are getting a bounce. Doesn't mean that the trade war is over in the crude. Mr. Novak from the Russian energy minister still thinks these markets are going back up on their own without them having to do anything. On the grain markets, getting a little bit of a bounce. Bonds and notes down sharply, which means yields coming up. We know that what the Fed just did. They threw $1.5 trillion over the past 2 days at the market, and then we have the FOMC meeting next week, so you've got to take that into account. Stock indices, a huge bounce, is they're still selling off the gold and the silver market. Now, copper's interesting. It came from a 240 level, and it's up 4 cents. Was that a blow-off number? On a normal day, I'd say so, but I don't know what to expect over the weekend. When we look at the data, the University of Michigan consumer data, it was expected at 95. It came in actually a little better, so that's good. Current conditions, well, they're saying they're a little worse. Expectation index down sharply. Why not? We know what we're dealing with right now. The import-export prices. So our import prices were down 0.5. They expected it to be down a little more than that, 0.8. And our export prices were down about 0.5 of a point more than we thought. In Germany, Germany's a talker. They do nothing. Remember that. They haven't done anything. They keep talking about what they can do. They're still caught when they had bushel baskets of money, and they just don't get it. But their final CPI was up 0.4 in the month. That was right in line with the forecast. They did not rule out the possibility of fiscal stimulus later this year, and nor did they rule out the government stakes in companies. Today, China Central Bank lowered, again, the cash the country banks need to hold as reserves. The end result is it's going to result in some $79 billion being made available that they can move their economy on with. The Transportation Ministry said that they're going to cut the import and export fees that go out of the ports, and they're going to do that to get things going. So what you're now seeing out of there makes all the sense. They're going to throw everything they've got, the whole kitchen sink, to getting the economy back online, where other countries are going to fight it in some manner, such as Germany, and we'll be seeing how France has to deal with it and the UK delaying their things. It's interesting to see the differences also between how South Korea handled their virus situation, what they're able to do versus Italy handling theirs. There'll be stories about this as to how we handle it, but folks, we're nowhere near the peak of our virus cases. We're still coming up that bell curve on the other side. You've got to keep that in the back of your mind as you plan what you're going to do in the futures markets. I want to remind you, one of the things I do each morning is I get you going. I know a lot of you wake up, what do you do? Well, that's where I want to come in. I've already been up from about 4:30 in the morning, and I'm reading like a madman all over the world, the news, trying to give you an idea as to what I'm seeing so you can start your trade ideas, if there should be a trade idea. How's that? And what I'm going to cover for you is 40 charts. They're going to look this way. They're going to look very different than the ones you see here. There's more studies on them, a black background. I want the numbers to jump. The idea here is we're going to cover sector by sector in the futures markets. It's going to have technical analysis, fundamentals. When I think you enter, I'll give you the point of entry, exit, stop, profit objectives. In other words, I'm going to talk to you as though you're sitting right next to me, walking you through the markets. I'm going to cover all these different sectors in the same way each and every time. Now, I make these videos available both in our handheld mobile app and in our laptops, but on our website when I do it, we're able to put a scroll bar. And as you scroll, you're going to be able to see, for example, metals. You can just jump to energies, the areas you want, or you can listen to the whole thing. The typical video is 20 minutes long. In the video, I really lay it all out. So you're going to be able to hear me say, buy here, sell there, I was right, I was wrong. I'm going to give you the ideas, chart patterns I'm not going to show here, so on and so forth. For that, $7.95 for the first 30 days. No contract with me. If you want to go another 30, it's 15, it can roll, or you can buy 1 year up front. I have been throwing in with this for a couple of weeks now. My free, at this point, and it will become subscription, access to my Spider ETF video that I put out at 4 in the afternoon. And now I've decided that people that are paid subscribers at the end of these different ads for my charting course, I'm cutting the course price to them only. sharply. So right at the end of the videos now, you'll see how to do that, the codes you need to go in and buy the charting course. Now you get a lot more information with it. You learn the exact techniques I have. So go to www.iraepstein.com. Under the word research, you can read about it, and that's where you sign up. I'm Ira. You have a good morning.